What's the latest trend, or what are some of the latest trends that we're seeing in property, and in particular you concentrate on commercial property?
Correct, yes. In terms of commercial property, there is talk about a bubble, and real estate is prone to these bubbles over time, and it can tend to suffer from oversupply. It can have these waves of oversupply, and it can also have these waves of capital. At the moment, supply isn't a problem. There's a few pockets around the world where the supply is coming on, but the real problem now is this weight of capital that you referred to. And real estate is this favoured asset class. It's the biggest of the alternatives, and investors like it for the diversification, for the income and so on. And this capital has been coming in from a range of sources, and that's pushed the pricing. And so what we're seeing at the moment is the yields, as you mentioned, are compressing dramatically.
Yeah.
So on those dimensions, some markets, central London, parts of New York, feels like bubble territory in terms of the pricing. It's back to where we were in 2007. But on another dimension, in terms of the spreads with bond yields, it's looking attractive still. So it's hard to say there's a bubble across the markets for those two reasons.
I was going to say, well, just because we're back at those levels, back in the 90s, I mean, again, how do you necessarily differentiate between an asset bubble and just between availability, interest, more money being there, like you say, cheaper financing? I mean, how do you differentiate, or how will we know when we enter bubble territory?
I think the metrics, looking over time, over history, are very good metrics. The two metrics, one is the actual level of yields, and when we get down to historic lows, as we are now, that's a warning signal. The difficulty right now is that the spreads are very wide, and that's because the bond yields are so low. So in Germany now, the spreads between bond yields and real estate is 5.5%, 550 basis points. So very attractive to many investors, which is continuing to attract in capital.
Yeah, talking of bubbles, and one of the key parts of my asset allocation in recent years has been the end of the commodity super cycle. You can call it a bubble if you want. We've seen that play out now in a lot of the FX space. You know, the fall in the Australian dollar, the Canadian dollar, monetary policy easing in both countries. But the commodity surge there actually increased the prices of their property, both residential and commercial. Do you see a big risk there, and how are those markets performing?
No, that's an important point, because we normally categorize real estate markets into two broad types. One is the more volatile markets, US, UK, Ireland, Spain, Japan, volatile markets, and the more stable ones, France and Germany. But through this last cycle, we've had this new set, these very commodity-rich, resilient countries, Canada, South Africa, Australia, that haven't had the downturn. So a big question is what's going to happen next to those countries. The one country across our 25 countries that we monitor as part of our global index that showed a slowing was Canada. And I think part of that is the commodity, but it's, I think, more back to the earlier point about the market becoming aggressively priced.